All right. Hello, hello, hello. I see my internet is struggling a little bit, so let's see, let's see. Can everyone see me? Can everyone hear me? Please confirm. All right, it's back. Seems to be good now. Perfect. Hello, hello. Good morning, good afternoon, good evening, everyone. How is everyone doing? Good morning. Hello. Hello, Double Mind. Hello, Emilian. Hello, hello. Hello, Delights. Isaac. Hello, Israel. Hello, Juan. Andrea. Love to see it. Love to see it. Hello, Bully. Greetings from Lithuania. Love to see it. All right, all right. Can you hear and see you? Perfect. Thank you for confirming. Thank you, thank you. I need everyone's help again today. And the reason why that is, as you can see, we're going over the forecast, but of course, it wouldn't be a live session if we also don't go over a few topics here and there. So feel free to let me know if you do have any topics that we want to go over. Feel free to let me know. Feel free to send your suggestions in. Hello, love the new MMT dashboard upgrade. Love to hear it. Love to hear it. I want to see it. I'm proud of it, actually. Of course, it's not me actually developing that or anything like that, but that is a whole team that is behind that as well. Let me see. Let me show it to everyone because it looks beautiful, in my opinion. I love it. Looks very nice. Let me see. Let me see if we can show it to everyone. Here it is. That's lovely. That's lovely. That's beautiful. Beautiful dashboard, in my opinion. With the notifications, to continue watching, upcoming events. Let me see. There it is. Upcoming events, continue watching. That's beautiful. Activity. I didn't complete any videos just yet, but that's absolutely beautiful. The first two modules right there, candle size module, order flow module. You have the roadmap, of course, as well. That's it's very nice. Credits to the developers, credits to the designers that we have in the team, because this looks lovely, absolutely lovely right there. Also the roadmap, which updates live when you start watching the videos itself. It's lovely, very nice. Love to see it. But I'm very happy that people also like it. That's great to hear. Let's see. Let's see about time and price. Okay, okay, okay. The perfect. Hey, Don. Thank you, my friend. Thank you, thank you. I will go over it. ZB1 and KC1 futures. Let me write it down before I forget, because I'm going to forget that. Let me see. You have ZB1 and KC1. Okay. Before I forget. Let me see. I have a light subscription. How do you use the daily forecast? The forecast is updated daily. It's in the name, daily forecast. If you go to the website and you'll see right there, there is, well, why not just show it to you again? Let's see what we have. Give me a moment. Let's see. If we go, if you're on the dashboard right here, see right there, and you go to view all modules right there. When you move to the modules, then you'll see all the modules that are accessible to you. Then you have daily forecast right there. This one gets updated daily. So every day there's a complete new forecast right there. Last one is February 13th right there, if that makes sense. So that's how it works. All right. Let's see, let's see. So what are the topics that we want to go over? I missed it. Was video lagging? It could be my internet, to be honest. My internet is not the greatest right here, this moment in time. Could be my internet, but it should be good. Should be good now. Let's see, let's see. Specifically on IBDA, no, I've not made a video on that specifically, I believe. No. Also not planning to. Not planning to. Could we go over a bit over unusual, usual context and flip fair value area? For sure. Let's see. Okay. That's a good one, actually. I like that. We have two lit usual slash unusual. Am I writing that correct? That looks weird. Unusual right there. Let's do it. That's a good one. Thank you. My first time on a live. Welcome, my friend. Hopefully you learned something. Hopefully you learned something. We can go over, what we can do is look at some opportunities that were present throughout last week as well. There were definitely some opportunities, which was quite interesting as well. Let's see, please tell again a brief narrative and context. We can go over that for sure. For sure. It ties into actually those usual context and unusual context as well. Narrative. Okay, let's dive into the forecast. Again, feel free to keep asking your questions, of course. Hello, Sadia. Hello, Mohammed. Hello, Xadari. I hope I pronounced that correctly. Feel free to keep on suggesting your topics, etc., and then we can go forecast, and then afterwards we'll see where we are. Nice, OTCR. Nice. Love to see it. Love to hear it. Very good. Keep us updated on that. All right. Let's see. This is a very good one. Actually, before we start, this is something we talked about quite in depth in the live session in MT, actually. And this is a prime example of what I always mention is we have Williams right here. And he says, hello, Arjo. When I backtest my win rate, it is 100%. But when I live trade, I can't even wait for a 4-hour flag to form. I do crazy stuff even when I know what to do. I need you to understand that backtesting and live trading is the complete opposite. As in backtesting, if I show you backtesting right here, I need you to understand as well hindsight backtesting. So like I do, for example, in a lot of videos, hindsight backtesting is great in my opinion because it trains your eyes to see certain concepts. But replay backtesting, where you are looking at the replay market right here and you're scrolling through it like this and then trying to find entry, it's not what you want to do. And your problem exactly stems from that. And what I mean by that is that you can skip a whole month by clicking 22 times right there, if that makes sense, in a few seconds. So a 4-hour value gap takes, well, a good 4 times 3, 12 hours to form. You can't click forward during live trading. So what a lot of people have is they replay backtest and they build unhealthy habits that they bring over to live trading. If you want to be a live trader, not financial advice, it is always better to just start off live trading. And some people think that's very radical. Some people don't like that advice. I can understand that. But from my experience, from what I see in different traders as well, is they set an expectation with replay backtesting. They use a tool, not going to name any names, and they give you data. Oh, you had a 100% win rate. Then you go onto live trading and you're nowhere near a 100% win rate, if that makes sense. So that's something that you should definitely ingrain into your mind. If you want to be a live trader, you should be live trading and not replay backtesting, etc., etc. Even demo trading is something to be careful with as well. But we can dive deeper into that as well if you do want to. Now, let's first of all see what we are dealing with regarding the economic calendar. The economic calendar last week, so the previous week, the current week that we are actually in, was quite a, not difficult, but it was just very, very, very empty, if that makes sense. So right here, we see a very empty economic calendar. Now we do have a lot, every single day, President Trump speaking right there, which brings in quite a lot of volatility in the market. You will notice that those events are tentative, it says. So what that means is that they also don't know when he's going to speak. So it can be at any moment during the day. Now we see a similar pattern is usually during PM right there, New York local time, which brings in some volatility as well into the market. Especially because, of course, the presidency is quite new, quite fresh. So we can expect this to go on for a little while as well. Now, right here, if we take a look at Wednesday, we saw CPI right there. So that made it a little bit tricky, which we all touched on previously as well. So for Monday, what do we see? We see a US dollar bank holiday and Canadian dollar bank holiday on that Monday right there. So for Monday, I'm more so relaxing, not necessarily looking to get involved just yet. But Tuesday and the remainder of the week is quite interesting. Now, one thing that pops out is FOMC meeting minutes right there. FOMC meeting minutes is not the dangerous one. The dangerous one is FOMC statement. So FOMC meeting minutes, I'm more fine with. It doesn't really matter to me, if that makes sense. So right here, overall, this upcoming week, there's no real disturbances in price action. So that means we can potentially see some more consistent volatility throughout the market, where we won't have to wait for a big news event, etc., etc. That is quite interesting. Again, looks all right, but let's keep the expectations low. Let's not say, okay, we have a great economic calendar, so there should be great opportunities. No, that's not how it works right here. So if we then look at the market right here, and we start off by looking at the US dollar, the Dixie. What are we looking at? Let's break this down fully again. Let's see what we are doing. First of all, we have this fair value area that we have sitting right there. Okay. Then on the weekly right here, we see that we have this weekly fair value area, weekly fair value gaps that we previously had a sting into right there, tried to push higher from, failed to do so. Again, what we talked about last week, the large wick at the top. That's not good. That's not a great sign if we do want to continue higher right there with this rejection fair value gap that we have sitting right there. That's not good. It's not what we want to see. Now, lower prices was also a little bit iffy, was a little bit tricky overall throughout the week because it was just not too certain. What we saw at the beginning of the week though, which was quite interesting, and we'll have a video on by the way, is that we have this fair value area. And this fair value area that leads to unusual context, which we discussed in the Tuesday live session. We saw this fair value gap that we could continue lower from because we are now not offering fair value. So we are seeking liquidity in the form of this fair value area low right there, which was quite interesting overall to continue lower. Afterwards, we also approached CPI, of course. We struggled a little bit to continue lower. Now, once we start to respect these bearish fair value gaps right there, we had quite a clear path right here towards this low sitting right there. Now, this low is major liquidity. So what does that mean? Major liquidity is very simply said, it's an intermediate-term low or an intermediate-term high. That's major liquidity. And major liquidity is very interesting because that is where we can potentially struggle a little bit. It's where price action will be a little bit slower, where we need to see if we want to run or sweep a certain low to either continue in the same direction, or if we can disrespect the fair value area that we have just created to continue higher again. So there's quite a lot of possibilities right here. Now let's break it down again. So we are not respecting this weekly fair value area and fair value gap at this moment in time. Okay. This low is very, very, very important. It is arguably very crucial even, because we run into this monthly fair value area and also into this swing low right there. So if we are going to sweep this low, meaning let's say Monday, Tuesday, we have something like this aggressive up candles right there, and instead we start pushing higher again, then I would say, okay, well, let's start looking at those highs right there to target them again. If that doesn't happen and we perfectly fine, start respecting fair value gaps that are overlapping with this low right there, we continue lower. We might have a retracement back into this low right here. Why is that? It's a nested fair value area, so we can expect a rejection from it right there. To then continue lower from, also perfectly fine with that. But at this moment in time right here, it's a lot of reacting, and well, the market, essentially what we go over every week, is a lot of reacting as well. So it's crucial. This moment is crucial to see if we run or if we sweep this low right here. And based on that, we can take certain action as well, if that makes sense. So that is very important to understand. This is exactly as well what we'll have a video actually on very soon, I hope, which will be quite interesting. All right, on Russell, I don't necessarily want to go over Russell, not too interesting in my opinion. If you're going to look at the indices, don't look at Russell, look at ES, look at NASDAQ. Again, like we've been mentioning, all-time highs. All-time highs are just a very clear bias to have in price action. And the reason why they are so clear is because even if we do want to continue lower, then we are very likely to still sweep the high to then continue lower from it, because then we're going to trap people into the buys to then continue lower. So this all-time high right there is extremely clear target, extremely clear. It's just a matter of figuring out the narrative. So what we actually wrote down right here, let me see if you can see it clearly without the light being in the, yes, there it is. So what we wrote down right here is narrative / context. You probably can't read it. Me, I also have a difficult time reading my own writing. But right here, narrative and context, those are part of a trading plan. So every trading plan has 5 foundational levels. And that means that we have, number 1, a bias, which is the direction. What is the overall target in price action? So every trading plan, what they need to figure out first is seeing if we are going higher or lower. Are we targeting a premium array or a discount array, essentially? If we take a look at NASDAQ, we are targeting this all-time high, which is a premium array, so we are potentially bullish right there. So we have the bias. The next thing is the narrative. So how are we going to deliver towards our target right there? And that is going to be through PD rays. So think of fair value gaps, fair value areas, and swing points right there. For example, what we see right here is this fair value gap gets respected right there, and that's in alignment with our bias to continue higher. Okay, then we have context. Now, what is context? Context is very similar to narrative. We have 2 parts of context. The first part of context is that we have a context boundary, and a context boundary is where people start looking for their entry. Then the second part of context is that you have a context target, which is always going to be the first opposing PD ray. So for example, we have this fair value gap right here. That fair value gap right there is our narrative, which also means it's our context boundary. It's where it's a boundary. Once we cross that boundary, we can go into the lower time frame to look for an entry. Then the first opposing PD ray is this swing high right there. That is our context area. So from this fair value gap right there towards the swing high is our context area. In other words, that is where we are going to look for foundation level number 4, which is our entry right there. And let's see, after entry, it is last foundation level, and that is risk management right there. So these are the 5 foundational levels. So if you go into the lower time frame, etc., you might find an entry right there. And that is where you want to look for an entry right here. Once we start to continue higher, we have a sharp turn, for example, right there. We have the right there to continue higher towards the context high. And you'll see the context high is very important. Why is the context high so important? From a liquidity standpoint, we're going to have a video on liquidity specific very soon as well. Been working on it quite some time now. But the way liquidity works is that sometimes, even if we want to continue lower, the market can't just go straight up, straight down right there. No, it needs liquidity of some sort. So what it does is, even if we have this context area right there and we have this context target right there, and even if it wants to continue lower, it won't just straight continue lower like this. It will still have a rejection from the fair value gap, sweep the context high right there to then continue lower. That's why at context highs, you'll see bigger rejections like this. And also why? Because they are intermediate term highs. What did we just mention on the dollar? That intermediate term highs, intermediate term lows are major liquidity, which means that we can expect bigger rejections from them. They are important levels overall. In the MMT, we talk about trading within highs and lows. If you are trading within highs and lows, you're doing a perfect job, because that's where you want to be. You don't want to be trading outside of highs and lows. And what I mean by that is, for example, here, above this high, we're now in the middle of nowhere. It's where you don't want to take an entry. It's a very basic rule. One of the first things we go over in MMT as well, in, for example, the high probability module. And the reason why that is important, if we trade within these highs and lows, so in this area right here, then we still have a reason to continue higher, to take that liquidity, and we still have a reason to continue lower. So no matter what we are going to do, we are still going to reach highs or lows right there. But if we don't, and at this moment in time, then we are more likely going to create a retracement to then potentially do something. That's not where we want to be located in price action, if that makes sense. So we can go over it more in depth as well. Anyway, before I start to completely make it a 4-hour live stream and we talk about completely different concepts right here as well, let's understand what we are looking at right here on NASDAQ. We have this resistance area right here, this 4-hour fair value area. We see that's where we create a rejection. So it's a ping pong effect. Why did we retrace back into this fair value gap in the first place? Because we reached this liquidity. And by the way, this was all this price action is called beforehand. We do this every live session in the MMT as well, where we know above right here, this major liquidity right there, what are we going to do? We're going to stall a little bit, consolidate. Why? It's major liquidity. So this is going to create a ping pong effect to trade back into a fair value gap to then potentially continue higher again. The same what we can expect right here from this fair value area. So this 4-hour value gap still overall looks quite interesting to target higher, to target this all-time high right there. Now, throughout the week, and I love this price action on NASDAQ, and we can talk about it more in depth as well, because this is very important to understand. On NASDAQ ES, we had a lot of manipulation, and every time we had manipulation, we mentioned right there, that's manipulation, most likely those fair value gaps to still continue higher. I need you to understand, fair value gaps, I'm sorry for all the people that are waiting for gold right there for me to go over gold. I promise I'll go over gold, but this is important to understand. Okay, so fair value gaps, they are a double-edged sword. And what I mean by that is, well, every sword has two sharp sides, of course. And one side is very good because fair value gaps tell you the direction. And the reason why that is because if we are going higher, what we inevitably see is that we are going to create bullish fair value gaps. So that's a fact that we are going to create fair value gaps. Perfect. But manipulation also is seen through fair value gaps. I mentioned this mainly in older videos as well, but it's important to understand. And it's not the market's objective to create fair value gaps. I need you to understand that. It's not the market's objective to specifically create fair value gaps. There's not some algorithm that specifically creates fair value gaps or anything like that. But there is an algorithm that tries to get everyone involved in the market. So fair value. So what happens is when we move higher or lower, we are going to, as a byproduct, not as our main thing, as a byproduct, we are going to create fair value gaps. And we see that in all the price action that we have. Because if we are going higher, we see bullish fair value gaps. If we are going lower, we see bearish fair value gaps right there. But this also means that when price is being manipulated, we have fast price action. Which means when we have fast price action, what are we likely going to do? We are likely going to create fair value gaps. So I oftentimes mention, and we talked about this a little bit in the previous live session as well, I oftentimes mention I don't like small fair value gaps. Why? Because tiny fair value gaps that you actually need to zoom in to see if it's a fair value gap in the first place, it's likely not universally agreed that there is a fair value gap. So one broker, there might be a fair value gap, but not on all brokers, if that makes sense. So it's not a universal fair value gap. The larger the fair value gaps also does not mean the better the fair value gaps. The larger the fair value gaps, arguably, the more manipulation is happening. For example, this right here, that to us in the MMT was not a move lower. That to us was manipulation to continue higher instead right there. So what we see, and this is what we'll get into, we had a great question. Can we talk about flip fair value gaps, flip fair value areas? What happens? This fair value gap, even though we don't necessarily expect lower prices from it, nothing is guaranteed. So everything is probabilities in price action. I need you to understand, because the first thing we assume, okay, well, if we do want to continue lower, then we are going to continue lower from this bearish fair value gap right there, which we tried to do right there with that rejection, failed to do so. Instead, we create this fair value area and this fair value gap right there, which is a flip fair value gap, flip fair value area to continue higher right there. It goes very in depth, and it's very interesting. It's all quite objective even, which makes it also very interesting. It's very easy to a certain degree to learn as well. So right here, simply said, to summarize for all the people, NASDAQ, we can continue higher. Okay, perfect. If we take a look at ES, we can also continue higher. The all-time high is a little bit closer. And we have a little bit more clear narrative, in my opinion. And that is that we have this daily fair value gap that we can continue higher from right there, which is also quite interesting, in my opinion. I do like it. YM, I wouldn't necessarily take a look at it. It's not worth it, in my opinion. DAX right here also, not that interesting. The ones you want to look at on the indices are ES and NASDAQ right there at this moment in time. Okay, let's take a look. So we mentioned on the dollar, it is just, well, at this moment in time, it's waiting to see what we can do in that Monday with those intermediate term lows on the dollar. and inverse that on Australian dollar, US dollar with this intermediate term high right there. So if we can potentially run that, see a daily fair value gap overlapping, for example, turns into a fair value area, which we can continue higher from right there. That could be quite interesting overall. But again, need a little bit more information overall to determine that. So it's quite important if we see a sweep or a run. There's a good video that I have on liquidity sweep versus run as well, if you are interested on that. This high right there, EU, but again, the majors, we can take a look at the majors. We can dive very in depth in the majors, but everything that's going to happen on the majors is completely dependent on if the dollar is going to create those bearish value gaps, respect them right there, or if it's going to create a sweep to instead continue high right there. So for me, I'm not necessarily that interested in looking at the majors right here just yet. What I was actually thinking of, what we can potentially do is, especially in weeks where there's no video, we can have a live stream on Wednesday, so during the week even. It could be quite interesting. So we can have a more updated vision of that as well. Could be quite interesting. Anyway, let's see right here. GU, it's the exact same. We already have this daily value gap overlapping right there with this fair. Is it overlapping? I say it is, but it's not right there. It's not actually overlapping completely. Okay, so what I do is I take a little bit lower right there. We can still have this daily value gap overall, which is sitting right there, which we can continue higher from potentially right there as well. Let's see what we can do. Again, let's pay attention to the dollar. It's very important for the majors, and this cycle repeats essentially for the different majors as well. So I don't necessarily have anything very interesting to add right here on any of the majors, if I'm being completely honest. So US dollar JPY, something that is quite interesting right here to look at is that we have this fair value area, which we've previously also mentioned. This is a fair value area, which we tried to respect initially right here. Try to continue higher from it, failed to do so, instead create bearish fair value gaps. It's that same flip fair value area right here and flip fair value gaps right there that we can potentially continue lower from. So if we do create as narrative areas 4 hour, the 1 hour right there to continue lower from towards the first target that we have in the form of this low, that wouldn't be too bad, wouldn't be too crazy, could potentially be quite interesting. All right, gold. Gold, we have a weekly fair value gap right there, which I want to pay attention to. See if we can create a rejection to potentially continue higher from. Again, the rejection is quite large right there. Pay attention to that. I would like to have good confirmation because there's a lot of momentum going against our trade at this moment in time. That is quite important to understand as well. So be quite careful with that, but potentially also, again, quite interesting right here. Gold, we can also go over a little bit the opportunities that we had last week, in the previous week, in this past week. Silver, not that interesting to me personally. It's a lot weaker than gold, so I don't really want to trade it. Don't really want to look at it personally. All right, Bitcoin right here. Bitcoin has been struggling a whole lot to continue higher, to continue lower. It's typical Bitcoin, and I need you to understand, if you are a day trader or you're a trader coming from crypto, we have this quite a lot in the MMT. It's not necessarily inherently wrong, but crypto is very fun to put some money into a meme coin, not financial advice, to invest something in like a Bitcoin, to swing trade potentially as well. For day trading, crypto is not optimal. It's not ideal. And the reason why that is because it's not consistently volatile. So crypto, everyone knows crypto as being very volatile. And that is true. That is true. Crypto is volatile, but not consistently volatile. There's a difference. And what I mean by that is volatility. Bitcoin will have 2 days or 1 day where it's extremely volatile. And then afterwards, it will just consolidate for a few months right there. Then it will have a day where it's extremely volatile again. Then for the next coming weeks and months, it will consolidate again right there. So there's no consistent volatility. If you want consistent volatility, start looking at the indices. The indices are a beautiful example of consistent volatility. They're always moving up or down very consistently, and crypto is not doing that. So it's quite important to understand as well. If you do want to focus on trading and you want to have the ideal scenarios, then crypto is not ideal for day trading. Very important. All right, so crypto overall, I do think it can still continue lower right there, but this consolidation is absolutely crazy to me. It's not that interesting right here. Crude oil, crude oil is not been that interesting in my opinion, but we do have this daily fair value gap, which we can potentially continue lower from right there. Let's see what we have. This target is all right. This target is quite interesting right there. That looks quite all right overall. Bank Nifty. So I was wrong about Bank Nifty last week. We did not follow through higher from the fair value area right there. We tried to push higher from it, failed to do so instead. Again, then this becomes the target. The low of the fair value area instead becomes the target right there. So I personally would like to take a step back on Bank Nifty. I'm personally not too sure what it wants to do. Let me also take a look at Nifty 50. See what we are doing. So Nifty 50 is just then, again, also not following through on those bullish fair value areas, which I did expect. A little bit of a shame. And we did reach this low. So let's see. Let's wait and see right there what we can do with that low as well. Let's wait and see right there. All right. Explain previous day high and previous day low. Previous day highs and previous day low are just, well, like it says, if you go to the daily fair value, if you go to the daily time frame right here, then every candle has a previous day high and a previous day low right there. This one right there. And those previous day highs and previous day lows, what they are and why they are quite significant is because sometimes we reach into fair value gaps right there. And other times what they are, for example, this low, what is that? If you go down time frames, it's a swing low. So that is a swing low right there. So it's liquidity. That makes sense. All right. Let's see. Before I forget, almost forgot right there. Let's go over the question Dawn had. ZB1 and KC1 right there. Let's see what we have. ZB, what am I looking at? There it is. The treasury bonds. Haven't looked at them in a while, to be honest. Okay, let's start with the recent price action. We have this high, we have this low right there. So this is a previous fair value area right there that we are sweeping to continue lower potentially. Now we are respecting this fair value gap right there. If we go into the weekly, so this is why this is also a major liquidity, right? This is the same thing that we see on the dollar at this moment in time and a lot of the majors. Those major liquidity areas are important. It's what we talked about when you're trading between highs and lows. This right here towards that low and this right here towards that high, that's great price action. Once we reach those highs, once we reach those lows, where you want to be careful because something like this might happen where we just reverse to continue higher instead. So looking at the bonds right here, we have this fair value gap that we initially tried to respect and instead failed to continue lower from. Now we are running into this nested fair value area right there. So if I were to take a look at this price action right here, then what I'm looking at is that we tried to push lower from it, failed to do so. Instead, if look at the bonds right here, I would say higher prices right here, looking at this target next, that target in form of that high right there. And from there, seeing we might sweep some highs to continue lower still to target those lows, but let's see what we can do. We're quite interesting. Short term, I would be longs right there. All right, let's see. KC, coffee. Let's see. What are we doing? I haven't looked at this one in a while, but it's quite interesting to see what we previously looked at. Let's see. When was the last time we looked at this? I was sitting right there. September, May 2024. Nice. All right, let's see. Okay. This is all-time high. It is all-time highs. We mark out the previous all-time high right there. Okay. I never like all-time highs, to be upfront and to be straightforward. I never like all-time highs. The reason why I don't like them is because usually it ends up being chasing price right there or trying to call a top and short it in a bullish market. So something I don't like. But on the weekly, what we can see quite clearly is that we have a weekly fair value gap right there, which that's quite pivotal. That's quite important Because if we do want to continue higher, we can have a rejection from it to continue higher, target a new all-time high right there. That looks quite interesting. I do like that. For the rest, I wouldn't do anything. I would wait for a retracement back into that weekly value gap, see what we want to do from it, want to push higher from it. Perfect. If not, then potentially start looking at shorts in the short term as well. That makes sense. Most minor pairs have so many wicks and few value gaps. How to analyze those charts? Personally, for the crosses and the cross pairs that do have, for example, Euro GBP is one that's really bad. I don't really pay attention to it. And what I mean by that is I just don't look at the pair itself. So for crosses, for example, JPY is quite interesting because JPY usually has a lot of activity, etc., etc. But overall, for the rest, I don't really pay a lot of attention to it. Hello, Robinson from Peru. Hello, hello, hello. I have a slightly different strategy for stocks, but overall the things work the same. Risk management, that's a good one, Sanjit. Specifically what about risk management? Can Trump move the market with his silly policies? In general, yeah. Yeah. Trump can definitely move the market, and Trump has been moving the market a whole lot. And I believe also Trump is quite active on platforms like Twitter, for example. So if he tweets something, it's very similar to Elon when he was tweeting a lot about Dogecoin, for example, Elon Musk, and it just moved the market all of a sudden. I wouldn't worry too much about it, to be honest. Let's see. I have stocks is specifically actually what we talk about in the. I love stocks, so it wouldn't surprise me if one day I do decide to create more of a stock channel on YouTube even. But for now, I only talk about stocks in MMT. Could you give a little crash course about how to use the CFD of gold when trading gold based on the futures? So the way I personally do it is it's not necessarily the best habit that I have. I need you to understand that as well. But for example, what I did for a very long time is I always traded a futures chart on ES, NASDAQ for the indices. It's very similar to what I'm going to tell you about gold. And what I did is if I was with a prop firm or with my own CFD broker, etc., then I would still on TradingView look at the futures, but on my CFD broker, I would then look at the candles if they line up right there and then just execute on the CFD broker. Now, the reason why this is not ideal is because of course, the price action is very different. So ES, for example, is the S&P 500. It's the US 500. So if we look at Pepperstone, the numbers are definitely going to be completely different. You don't want to pay attention to the numbers. But here we have reached this high, for example. I wouldn't pay attention to that. I would only pay attention to the futures chart. That's the same thing that I do on gold, for example. So if I see a trade opportunity on gold, I look at it from the trading view perspective, from the futures perspective. Then I see if the candles line up on my broker and then enter, if that makes sense. It's purely by looking at the candles. It's not ideal. It's not ideal. If you really want to take the indices, for example, a flow trader very serious, I would just advise go for futures. Risk percentage. It's a good one. It's a good one. Risk percentage is an interesting topic. And I need you to understand, I think what every trader at a foundation, at a fundamental level needs to understand is that risk management allows you to be a trader in the first place. So what I mean by that is risk management is the key to success for any trader because it allows you to be a trader. If you don't have risk management, then it's simply a form of gambling, arguably. And risk management, well, of course, there's a lot of parts to risk management. You have trade management, stop loss, break even, etc., etc. Getting risk off the table in that sense. But risk percentage, the way you want to approach it is you want to have boundaries ideally. And what I mean by that is, for example, if you have a fresh account for 10K, so let's say, let me draw this right here to make it as clear as possible. Okay, so here we start. This is your 10K account, let's say right there. We have a fresh account right there. Then if you go into drawdown, let's say this is minus 2% drawdown right there. Let's say initially you were risking 0.5%. Then that boundary right there, you want to now drop in risk to, for example, 0.25%. You can change the risk parameters however you want. But also if you go into profit right there and you go, let's say plus 2%, then ideally you have this and you see this as a new boundary as well right there. So if I reach this right here, then if I now go below it again, I want to drop in risk to protect the overall profit that I made. So I don't go all the way back to my opening balance right there. So that's how you want to use boundaries. It's quite an interesting topic in my opinion. Nice, yeah, Don. It usually lines up. So Don says, from my study, 0.75 level range is silver bullet. It usually lines up with no resistance areas. Correct. All right, let's see. So we had we have multiple topics. We talked a little bit about narrative and context. We also have flip and usual and unusual context. Let me dive a little bit deeper into that. Again, we're going to have a specific video on this quite soon as well, but the way this works is quite interesting. And let's break down the dollar, what we looked at for this week. So what we were looking at on the Tuesday live session in the MMT is usual context. Usual context is the usual thing. So what I mean by that, usual context is where we have a fair value gap, fair value area towards one side, and we can simply continue higher from that. So for example, when we have this fair value area right there, and we have this fair value gap, right, a tiny fair value gap, don't like that. But let's just say for example's sake, we have this fair value gap. The first thing we might expect is that we have usual context to continue higher from it. Now, usual context doesn't work great in the scenario where you have a sweep going against it right there. Why? Because there's a lot of momentum against your trade. So this right here is not something you would want to look at longs from right there, but it is something where you always assume, and the reason why you always assume this is because the reacting becomes very easy, is you always assume that fair value gaps follow through and fair value areas follow through as well. So we expect the fair value area to hold to then continue higher right there. Now, if that doesn't happen, then what do we do when we have this specific pattern? The pattern I'm about to show you, very specific. When we have this pattern, this creates unusual context, and that is when we can start looking to target the fair value area low instead right there. So what we see right here is that we try to push higher from the fair value gap, from the fair value area overall. We fail to do so right there. And what do? We create a bearish fair value gap sitting right here. This is the pattern. So we get a failed rejection right there, create a bearish fair value gap instead, which we can continue lower from. To target, since this is a fair value area, and the way a fair value area works, it's going to offer fair value, try to push higher from it. If we don't offer fair value anymore, then we are seeking liquidity in the form of the low right there. So when this specific pattern occurs right there, we now have a very good indication that we do want to continue lower. And this right here then turns into a flip fair value area, and also like we have that flip fair value gap right there. And it's nothing special, by the way. You can name it just a fair value area, just a fair value gap, but it's that first transition right there. So some people mentioned to me, should I trade sharp turns or should I trade order flow entries? Always, if you have the choice, trade order flow entries initially. Sharp turns are very nice and they're beautiful, and we essentially removed the stigma of needing market structure shifts in price action itself as well. But I need you to understand that most times people use sharp turns wrong initially. And what I mean by that is, for example, if you try to enter from this sweep right here, and we have this sharp turn. So we have a fair value gap right there, and fair value gap right there. In and out right there. They don't have to be overlapping. Just fair value gap in and out. Shows manipulation. So what happens right here is if we continue lower from this bearish fair value gap, hindsight 2020, of course, is very obvious. But at this moment in time, we can continue higher from this bullish fair value gap and continue lower from this bearish fair value gap, since they are both part of our current order flow. So order flow is 50-50 at that moment in time. So it's not confirmed higher, it's not confirmed lower right there. So a sharp turn entry oftentimes is quite tricky in that as well if you don't know how to go about it. So what happens afterwards, once we confirm it and we follow through on this fair value gap, now there's only one way to go, and that is bearish right there. So that makes very interesting. And this is usual. This is now usual context because we now have a usual fair value gap towards our unusual context overall external target right there to continue lower and target the low right there. And this in itself is a whole trading plan. So you might say, well, Ario, this is fun on the dollar, but do you execute on the dollar? Not really. But at that moment in time, this allowed us to understand you a lot better. So what did we look at on the Tuesday live session right here? Is that we had, let me see where it was. It was right here. It was this daily fair value gap that we can potentially trade back into. Okay. And if we go into the 1 hour right here, let's see what we have. We start to push higher right here through those fair value gaps, where on the 15-minute and the 5-minute specifically right there, we get a very interesting price action trading towards right here the daily fair value gap. And again, this was what we discussed right there in the live session, in the MT live session. Thank you, Alex. Thank you. Thank you. All the donations, I appreciate a lot. It's not needed though. Just so you understand as well, it's not needed. But thank you. I appreciate it a lot. Thank you, Alex. I need to know about passing a funded account, risk management, and how to successfully pass it. So what I think, and I want to create a specific video on this as well. But it's not going to be on the usual Ario EO channel. It's going to be more niche. And I want to create a video on the whole prop firm thing. And what I mean by that is, I don't think prop firms are bad. I think prop firms are great to a certain degree because they can allow you to get capital a lot faster than you could in the past. But where traders now go wrong is traders are turning into what they promised everyone, what they were begging everyone to believe that they weren't. And traders in the past were always convincing other people, I'm not a gambler, it's not gambling. And prop firms show that nowadays, most of the traders are in fact just gamblers. And that is because they don't use proper risk management. So they risk 3% on a challenge account, etc., etc. Essentially, they just buy so many challenges to then pass one, get a payout one time, etc., etc. It's just not something you want to do. And in my opinion, at least, and the reason why I think is because prop firms, they are there to your advantage. Understand that very clearly. They are there to your advantage. So people that are trying to essentially go into prop firms, try to get a payout once, a large payout, and then get banned because the prop firm simply, well, saw that you were risking 5% on a single trade, then what happens is you're going to get banned. I think people getting banned from prop firms, it's a little bit sad because you shouldn't be proud of that. The reason why you shouldn't be proud of that, because you're living in a perfect age where you can make use of prop firms, and instead of focusing on the short-term gains, you can have long-term gains by consistently getting payouts instead of one time risking 5%, getting a, let's say, 10K payout. Okay, if you can consistently get a 1K payout and you do that for month and month, you're building a healthy relationship with prop firm as well, but it also benefits you in the long term. And that's why I think it's quite important to understand. So what that leads down to, what I'm trying to say right there, is that your risk management is quite key when it comes to challenges as well. And that's where you, again, want to use boundaries. It is very hard to completely blow a challenge if you have good risk management. And it's going to take you a lot of trades. But usually what happens is people don't have good risk management, which goes hand in hand with they don't have good psychology. So they're not going to stick to their risk management plan, or they don't have one in the first place. And they just risk a whole lot as well. And then they blow their account. But what you want to do is you want to, again, have boundaries. So you want to, if you are in 2% drawdown, for example, drop and lower your risk. If you're in profit, you can up your risk a little bit more, but also not significantly. So for example, from 0 to 5% to 1% right there. But if you are in drawdown, and that's essentially what it comes down to, if you're in drawdown, lower your risk. And then you at least don't blow the account, if that makes sense. Nice, Sadari. Nice, nice, nice. Arnav, I just answered your exact question. I'm not sure if sometimes I really wonder if people are just answering their questions, typing like this, and just have no sound on or whatsoever. It's so funny. Sometimes I answer a question for a specific person, and they just ask the question again 2 seconds later. Let's see. How do I calculate lots for a large account? You have lot size calculators for free as well. I would advise, if you can install a certain EA into your MetaTrader or whatsoever, I would advise to do it. And the reason why is because when you are trading, we try to take away as much focus on other areas. So what that means is that we just want you to look for a trade ID right there, and it needs to be very smooth. So for example, if you need to calculate risk and you need to calculate your lot size, etc., whilst going for that trade, it's not ideal. It's where you just want to have a simple EA that helps you with that, and then that automatically happens, if that makes sense. No worries, Arnav, no worries. I'm in debt, 3,000 US dollar, and the urgency of pass my funded account and pay my debts is making me lose almost profits in the account. What should I do? My friend, or anyone out there, if you are in debt or you're struggling with money, then trading your way out of that struggle of money initially is not the best thing you want to do. So if you have debts, just if you have a full-time job or anything like that, just use that full-time job to first pay off your debts. Then when you have somewhat of a buffer, etc., you can comfortably live. Then potentially start looking to invest here and there, etc., etc. But not financial advice. Don't trade your way out of debt, because there's going to be such an extreme burden on your psychology that I wouldn't say it's impossible, but it's very well near impossible to trade your way out of that. So trading is not the way out of that. That's very important to understand. No matter how many Lamborghinis you see, how many Rolexes and nice watches you see by someone promising that you will make that back within a week, it's not going to happen, most likely. So that's very important. An EA is a certain tool. So like an indicator you have in TradingView, that's somewhat sort of like an indicator you have in MetaTrader. Does trading demo account really don't have that much of a feel as if you are trading a live account? Because I've been hearing those so much lately. Yes, I completely agree. Again, I've been mentioning ever since I've gotten a little bit more talkative on social media, I've always mentioned that not financial advice, and if you can allow yourself to be in that position as well, so you can allow yourself to lose the money, so you're not in debt, let me make that very clear as well, first of all, that you should start live trading as soon as possible. And the reason why is because, and live trading, when I say live trading, I don't mean buy a 100K account, go all in. I say buy a 5K challenge, buy the smallest that you can afford right there, or even put $100 US in a small live account right there. And then there's something on the line, something you don't like to lose. And with a demo account, there's nothing on the line. So humans are, the way evolution works in general is humans are scared of feeling the same pain over and over and over again. So what happens is if someone touches a fire and burns their hand, they're not going to touch that fire again. So they're going to learn from it very faster. If that fire is there and it doesn't hurt you or whatsoever, you might all of a sudden touch a real fire all of a sudden, and now it hurts. So what I mean by that is your learning curve and your learning is going to significantly be faster if there's something real on the line, because you take the loss a lot more serious, if that makes sense. So that's what I would advise. My non-financial advice: do whatever you want with it. It's really, some are free, JetSim. Some are free. Yeah. How to I think what is important to understand, how to not get lost in a lower time frame, like the 5-minute or 50-minute. It's a good question, but it's, for example, when I am on the lower time frame, also during live session in the MMT, I'm not in the lower time frame just for the sake of being on the lower time frame. So what a lot of people tend to do, from what I see at least, is right now they go into the 5-minute right here, and they try to figure out what the 5-minute and the 50-minute wants to do right there. And the reason why I think in general that is quite wrong is there needs to be a boundary as to why you go into the 5-minute or the 50-minute. So remember the 5 foundational levels that we talked about a little bit earlier. If there's a context area, and let's say you have a 1 hour fair value gap where you are expecting higher prices from right now, now that is a boundary to now go into the 5-minute. But don't go into the 5-minute just for the sake of going to the 5-minute. There needs to be a reason why you are going into the lower time frame right there. So a lot of people get lost in the lower time frame because they have no business of being in the lower time frame, because there's no signal yet as to why they should be on the lower time frame, if that makes sense. For example, here on the 5-minute, we finally see, okay, we have this fair value area right there. Now I can go into the 1-minute right there, because that's a boundary to now go into the 1-minute right there. That's why we use context areas, because context areas, they are very helpful in understanding when and where you should go into the lower time frame, if that makes sense. I wouldn't necessarily advise that. Now I'm 1%, now I'm minus 6% on my account. Can I risk 2% with 1 to 3 RR to get break even in one A+ setup? I wouldn't advise that. And first of all, I would specifically say as well, is 1 to 3 your usual RR that you go for, or is it specifically to get out of drawdown at this moment in time? And if it's not the usual, then it's not something you want to do. You don't want to target 1 to 3. Next to that, increasing risk when in drawdown is usually not the way you want to go about it. You usually want to decrease risk when you are in drawdown. And then drawdown sucks, because drawdown, and essentially if it's minus 6% drawdown, then you also lost a whole lot of trades unless you risk quite a lot. Drawdown sucks, and it's just a boring effort to get out of it, and it's going to take some time. But that's it. That's essentially it, and that is drawdown. So it's better to not get into drawdown in the first place, because if you do want to climb out of it, and it's a live account, for example, it's going to take a while. So no, I would not necessarily advise that. I would advise to decrease risk instead. Let's see. How are you doing, Rainson? Blowing an account feels better than being in it. Okay. Well, then that's it's quite a special observation. Quite interesting. If you feel like that, I know a lot of platforms where you can go and just where they would love for you to just keep on blowing accounts instead of being in it and trying to get payouts. There's many platforms out there that would love to help you with that. You know what's the Kakarot? I can understand somewhat where you're coming from, but you know what's the best feeling is when you are in heavy drawdown and climbing out of that drawdown slowly. That's arguably in trading that feels better then a payout. That's so rewarding when you climb out of your drawdown. That's extremely rewarding. So I would say try it. Give it a try. Give it a shot. Why not? Yes, lower time frame, Callum. Yeah, lower time frame as well. If it's above my time frame, my entry time frame. Let's say 5 minutes is my entry time frame. If it's 15 minute opposing resistance, then I still look at it. Yeah. I do respond to emails. Not personally, by the way. I rarely, in some cases I do, but I usually don't respond to emails myself. But it's Derek that responds to it. But if Cello, if your emails are not getting answered, then there's something wrong. So please make sure you do check. Sending it to info@tradingmmt right there. It can also be info@ario.io right there. Then Derek will answer the emails. Every email gets answered. Unless, of course, someone just comes in and sends an email who is cursing at us or whatsoever, then we might ignore it, of course. But I don't imagine you to do that. Yeah, I want to create a new YouTube series. 100%. 100%. Can't figure out fair value area. Fair value area is... I can understand it because fair value area is quite a difficult topic to first grasp. And for example, this right here is a fair value area right there. And the reason why is from an intermediate high to an intermediate low right there, that's a fair value area. So this, for example, intermediate high, intermediate low, it's also a fair value area right there. And that continues right there, right there, right there. Let's see. How to be consistent on good psychology. I think full-time trading, a lot of it, what it comes down to is consistently monitoring your psychology as well. So what I mean with that, for example, what a lot of people tend to do is when they shouldn't be looking at the market, they still look at the market. Now, that's not inherently wrong, but you're essentially what you're doing is wasting focus. You're wasting brain points, as I like to call it. And especially, for example, if you know you shouldn't trade ahead of NFP, a lot of people still tend to take a look at NFP, etc. It's the person who can keep their psychology in check the longest, in my opinion. So you should also adjust your own routine to that and only using alerts, for example. At this moment in time, I'm not going to stare at EU because I know EU is not interesting for me at this moment in time. So I just walk away. I might check in a few hours, or if let's say this is my context area right here where I potentially want to look to get involved right there, and I set my alert there. I don't look at the chart, I don't stare at the chart, but instead I use an alert right there. So I think that's something you should take into account, if that makes sense. Ah, Cello, oké. Ik kan hem wel checken. Wanneer had je hem gestuurd? I can check it. But Derek usually also, he's Dutch, he's not Dutch, so. But otherwise he'll let me know, so no worries. It will get a reply anyways. All right, I'm going to end it here, team. Thank you everyone for being here. Something that I had in mind that we might want to start looking at doing is looking at Wednesday live streams as well. Could be quite interesting. But we'll check it out. We'll see how it is. All right, thank you everyone for being here. If you do want to join the Discord as well, then of course, link in the description. There's also a PDF for the fair value gaps one if you're interested in that. Link in the description. And then I'll see everyone in the next one. Perfect. Have a great rest of your Sunday. If it's already Monday for you, well, sleep well if it's in the night, of course. Trade safe. Remember what we talked about as well. All right, perfect. Thank you, everyone. Thank you.